If you are a business owner, especially in the health and fitness space, chances are you're overpaying in taxes. But the truth is, you probably already know that. That's why you're watching this video. You just don't know how to fix it. Hey there, I'm Ashley Shepard. I'm a CPA and tax firm owner. And for the past 8 years while I've been running my firm, I've recognized that there are 3 main pillars that business owners will need to master in order to pay less tax. So let's break these down. Pillar number 1 is having the right entity structure. Your entity, whether it's an LLC or an S corporation, a C corporation, sole proprietor, whatever it may be. This is the foundation and it will really set the tone for how your company is taxed. Most people, they're not set up correctly. In fact, most people don't even know to think about how you're structured, what your structure is, and consider, should I change it this year? For example, if you're still operating as a sole proprietor or an LLC, just a single member LLC, and you're doing 50, 75K profit, you could be missing out on thousands of dollars of tax savings that you wouldn't be paying if you had changed that structure into an S corporation. The right structure can, of course, help you lower your tax bill by lowering self-employment taxes, but also can also set up the foundation for future growth plans. Bottom line is, if you haven't considered or reviewed your structure in the past year, it's probably time to speak with a professional and get that reviewed. Pillar 2 is maximizing your deductions. Now, we all know that we can write stuff off, but the issue with this becomes not knowing what we can write off exactly, what is an actual business deduction, but also getting organized in a way so we don't actually forget to take deductions that we actually had. Maybe you purchased something on a personal credit card, you forgot to include it with your business expenses because it wasn't with your business account, right? So it's really getting organized, setting everything up in a very structured manner, and then also learning what is a legitimate business expense for my business? What can I write off? Out of all the expenses I have, what can I deduct? There could be things like home office. If you work from home, you can write off some of your home expenses to maintain your house. It could be auto expenses if you do drive for business. It could just be mileage. It could be actually the cost of purchasing and maintaining a newer vehicle. You could also hire your kids in your business, which is a deduction for you and tax-free income to them, assuming they meet some criteria. And then also travel. If you're doing any business travel, going to networking events, conferences, learning some new technical skills, all the travel to get to do that thing, that business trip, is going to be deductible as well. Now, these aren't loopholes, these are legal tax deductions, and the IRS allows them. They only work, though, if you track them properly and you're staying compliant. A lot of times I see business owners lose out on tax deductions because they're either afraid to take them, they've been told, you can't do that, you'll get in trouble. They don't know what's allowed, they don't know what I can actually write off. Or they threw all their numbers together for taxes because they're in a rush because they waited until the last minute and they just had to get their taxes done. So they estimated and made numbers up or just rushed through it and forgot several deductions that they actually would have had. This is where working with a proactive, strategic, and organized professional really pays off. And this leads us to pillar number 3, the final one. That is advanced tax strategies. This is my favorite part. Now, pillar 1 and 2, those are foundational elements that you absolutely need to master and have dialed in before you even consider number 3. A lot of people want to jump to the 3rd. Tell me all the cool things I can do. You need to master number 1 and 2, the boring stuff. You need to get that dialed in, and then we go into 3. So this is advanced tax strategies. Now, this is where the magic happens. There are things like, retirement plans. You could set up a 401k plan, solo 401k, or if you have employees, the conventional safe harbor 401k plan. This is going to allow you to defer taxes on some income and also have an extra deduction because the employer can match. You can also leverage real estate strategies. Right now, the short-term rental strategy is a very popular, becoming very well-known strategy out there that basically allows you to buy a property, rent it out on Airbnb, follow a few very important stipulations, and write off a good chunk of the property. Also, since the Trump bill has passed in 2025, we're going to be able to write off a lot more of that property. This is a very, very amazing strategy that you can run any business. You can be W-2, and you can get massive deductions just for investing in an Airbnb short-term rental property. You could also do the Augusta strategy, where you're renting your home to your business for business purposes, whether it's a photo shoot, you're having a company meeting, and you basically get income out of your business into your personal account tax-free. It's a deduction on the business, not taxed to you. It's a great strategy if you own your home that you live in. You could also invest in alternative businesses or investments that generally are going to provide you depreciation deductions or just other tax credits and incentives. Now, some examples of this are the heavy machinery equipment rental company. There's also a film deduction, a film investment financing deduction that you can invest in as well. Now, all of these alternative investments, businesses, they all do require your money and your time. And a lot of these, they are for high income earners where you have lots of taxable income, lots of tax, and you have to have the cash in order to do the investment to get the benefits. But these are amazing strategies for those if that's kind of your situation. Now, all the strategies, this is just a handful. There's so many out there. There is not a one-size-fits-all plan or strategy. It's really going to depend on you, your goals, your situation, and what you're interested in. But when you do these right, you can set yourself up to save yourself thousands of dollars, maybe tens or even hundreds of thousands of dollars in taxes every single year. Most accountants are reactive. They're going to file your taxes and say, see you next year. But if you're serious about lowering your tax bill, building wealth, just kind of being on top of your money, you need someone who's going to work with you from day one of the new year throughout the entire year. Help you with advisory, planning, strategy, and all the other stuff that you have to do, all the compliance stuff. So let's recap. If you want to pay less tax, the 3 pillars: number 1, get your entity structure right. Number 2, max out your deductions and know what you can write off and max it out. And the third one is all the cool, fun, advanced tax strategies that's going to be custom to you, and learn about those, which ones you're interested in, and start implementing those. If you're not sure where to start and your current CPA is not having these conversations with you, let's talk. Feel free to send me a message on LinkedIn, and we can schedule a free consult, and I'd be happy to talk with you. But let's make sure that you're not giving the IRS an extra tip this year.